In syndication, it's about credibility. It's about your network. Do people have, know, like, and trust you is the big thing. Once you start developing the network and you actually execute upon previous deals that you are doing, people return. They find that now you have much more credibility. You actually showcase what you talked about, your projections now being your actuals. So that definitely helps once you get a little deal flow, deal structure behind you, or unit count, I should say. But the relationship can be established a long time before. And that's why using friends and family initially is very easy. They know, like, and trust you already, even though you don't have any credibility as far as a syndicator or as far as a new business proposition. You haven't done it as much. So I'd say, yeah, once you start making those relationships grow. But we're still going out there. We're still doing marketing. We're still finding other people like us, because a lot of our business is based on finding busy professionals, W-2 investors who don't necessarily want to make real estate a full-time job.
You're listening to the Guerrilla State Investing Podcast. We're not here to bruise your bananas with guru sales pitches, overrated fluff, or any other kind of monkey business. We simply provide the ground-pounding truth about what it takes to be successful in real estate.
All right, we are live. Welcome to another episode of Guerrilla State Investing Podcast. My guest today is Chris Levarek with Valkere Investment Group. Before I welcome Chris to the show, let me give you a quick background on Chris. He's a former firefighter in the United States Airforce, graduate of Arizona State University. He is a W-2 employee for Switch Think Solutions. He's an IT engineer with them, and he does real estate investing as well with his family. Correct, Chris?
That's right.
That's awesome, man. And he's been on several podcasts. He's a published author, active on Bigger Pockets blog and forum. He's been on the Military to Millionaire podcast, the Best Ever Show, Military Cash Flow, etc. He currently resides in Phoenix, Arizona. Welcome to the show, Chris. Thanks for being here.
Thanks, Brandon. Good to be here.
Awesome,
Appreciate
man.
you having me.
Well, I know you and your family have a lot of experience in the multifamily syndications, but what do you have going on today, Chris? Tell us what kind of deals you got happening this week. What's on the horizon for you guys?
Yeah, sure. So we are working on a big deal right now out of Florida. It's 384 units, about $41 million acquisition. And we are partnered with a couple other groups doing that. Really cool property. Just got back from Daytona about 2 weeks ago. So a good excuse to go down to Florida and see the beaches. But yeah, B+ asset. It's light value add and 97% occupancy already. A really great business plan already in effect. So we are just happy to be a part of it and enjoying the ride.
So you guys are under contract on that deal?
It's actually, we are coming in as a partnership. So we're buying out a partner. So we're replacing Wall Street equity with private equity. So there is no under contract. It's just a new partnership.
Okay. Explain that to the users on how that came about, how you got that deal presented to you. Was just someone looking to exit their side of the deal, called you guys and said, hey, would you want to be part of this? Just kind of give us a background on how that happened with this 384 unit.
Yeah, a lot of this deals with partnerships. So I tell people all the time, just if you want to get into syndication, a lot of it starts with, you could be passive, you could be active, but it's about connecting with people. So we have a partnership with Integrity Holdings Group, and they actually made a connection with a company called Lloyd Jones, 40 years experienced asset management team, a lot of properties in Florida, but they are spread throughout the nation. I think they have over 1 billion in assets or something like that. Really experienced group. And they discussed with Integrity Holdings Group, not us initially. So how there was opportunity to replace private, come in on a deal this size and be able to get a beneficial deal for limited partners and general partners, because a lot of time in REITs, they're dealing with Wall Street institutional regulations and money that has specific requirements to deal with it. So when you come in with private equity, you have a little more leeway. You have room to grow with the limited partners, room to negotiate, room to structure the deal in a way that works for everyone, and get private investors in on the deal. And so that was a cool arrangement that was beginning to form. And it led to a partnership on a deal called Lake Forest Apartments down in Florida. And so we've been partnered with Integrity Holdings for the last two deals, a 120 unit in Texas and then an 84 unit in Columbus, Ohio. And so they brought us in that arrangement as well. So then we flew down to Daytona. We met Lloyd Jones. We hung out with integrity, and we made that more of a cohesive partnership. But that's kind of how it got started and is where it is now.
Awesome. So on that deal, how much capital do you guys have to bring to the table? How much do you have to raise into that deal?
It's a $12.4 million raise. So we're looking to bring in, around 1 to 2 million. We're a small piece of that, but multiple groups bringing it in. We have 1 million cohesively as general partners in the deal already of that 12.4. So we're roughly raising about 11.4. But
okay. And inside your team, how many doors do you guys have total inside Valkere Investment Group?
So we're under management for 242 units so far.
242 units. That's awesome.
Correct.
When you're raising capital, because I know that's a big part of this game, and we're going through it with our group. We're starting with smaller deals, using a lot of our own capital, but we are also going after family, friends, colleagues for, $25,000, $50,000. When you start getting bigger deals, are you getting investors coming to you? Or are you still having to go out and do the heavy capital raise like you did early on?
Right. Yeah. This in syndication, it's about credibility. It's about your network. Do people have, know, like, and trust you is the big thing. Once you start developing the network and you actually execute upon previous deals that you are doing, people return, and they find that now you have much more credibility. You actually showcase what you talked about. Your projections are now being your actuals. So that definitely helps once you get a little deal flow, deal structure behind you, or unit count, I should say. But the relationship can be established a long time before. And that's why using friends and family initially is very easy. They know, like, and trust you already, even though you don't have any credibility as far as a syndicator or as far as a new business proposition. You haven't done it as much. So I'd say, once you start making those relationships grow. But we're still going out there. We're still doing marketing. We're still finding other people like us, because a lot of our business is based on finding busy professionals, W-2 investors who don't necessarily want to make real estate a full-time job. And that's what we started it as anyway. It led into a business, but that's not necessarily what a lot of people want me to do. So we know there are a lot of other people like that out there. And when you think about your network on social media, I say this all the time, like, people kind of say, oh, I have 2,000 followers on LinkedIn, or I have 5,000 followers on Instagram. Well, that's really small compared to the population of the United States, and compared to all the people searching on Google. There's a lot of other people out there that don't know real estate, and you can go and make a difference and help them understand this asset class. So we're still actively out there.
Yeah, that's so important to get in front of people to tell them what you're doing, right? And what you've done. I think the challenge for a lot of new investors that are trying to syndicate larger deals, like our team, we have some smaller assets under management. We're actually closing on a 10 unit this coming Friday. We've got another 8 unit in the pipeline that we're doing joint ventures on. But on the syndication side, you have got to land that first deal to create the credibility. So can you dial it back to when you guys were syndicating your first deal? How were you able to break through to some of those investors that say, hey guys, what have you done? Have you syndicated yet? And you're like, well, no, but can you give me $50,000? Like, how do you break through that wall to get those investors to believe in you?
Sure. Yeah. And couple things there. I think it's surrounding yourself with experts in other areas that validate what you're doing. So that means attorneys, property managers, securities attorneys for that reason, giving you that kind of credibility because of their experience, because of the legalities, and they're showing documentation that gives you support. But then it's starting with the friends and family network. I think our first syndication, we raised probably $450,000. It was a small 16 unit, and we did it a little different than many people in the space. We didn't do mentorship. We didn't go and partner straight out the gate. We partnered with limited partners. Yes, we partnered with, one boots on the ground for our 16 unit, but most of it was just us grinding it out. And before that, we had done a lot of small multifamily. So with duplexes, 5 unit, 13 unit, a couple duplexes that out there. So we had credibility as far as the value add idea, the business plan, as far as, increasing value enough where we could pull out equity or increase returns for someone invested in the deal. And every deal we had done, regardless the size, we had private lenders. So we didn't start out with our own money or anything like that. We did private lenders in every deal, private lenders or investors. And so that gave credibility. Even if we were trying to do a bigger 16 unit, we had a model that had been working on smaller size properties. So it was a bigger raise, but the risk profile goes down because you have more units to sustain vacancies, to sustain repairs that need to be done. So there's kind of like an offset there, but that's how we did it.
Yeah. Dial back to that 16 unit deal. You said you raised $450K on that deal.
Yeah.
So what was the total price of that asset?
It was around $1 million.
Okay. And so did you joint venture it or did you syndicate it?
So we syndicated. It's not a very common thing, I guess, for people to syndicate something that small. But we did.
The rule of thumb we hear is like, hey, anything under 2 million, you want to joint venture it because the legal cost of syndicating, it just doesn't make sense. So explain why you syndicated that one and didn't do the joint venture.
Mostly because we were trying to prove the concept. If we're going to get into it, why would we go do a joint venture? Because that's not what we're trying to do. So I guess when they say it doesn't make sense, it doesn't make sense financially if you're losing money.
Right.
But if you go spend $15,000, which we did, on a PPM and all your syndication documents, but yet that $15,000 is built into the cost of the acquisition, then do you really care?
Yeah.
It comes down to that. Yeah, you could make more if you, but what is 5,000 more? What is 10,000 more? What if this 16 unit acquisition leads you to, like us, getting an 84 unit? Or getting a 120 unit. In the big scheme of things, did that saving of $5,000 or whatever matter as much? Not really,
Right. That makes sense because we go back to the credibility thing, right? Have you, we get the question, have you syndicated anything? And you say, yeah, we syndicated a 16 unit. That's immediate credibility to a lot of people. And it may have cost you, a little bit of money up front on the legal side, but you're recouping that because whatever it was 6 months later, you've got an 84 unit deal and you go back to those investors and there's proof of concept there.
Yeah.
So that's, that's kind of a dilemma that we're facing in our team is, the joint venture model versus the syndication model for the smaller deals that kind of the low hanging fruit, right? We're trying to syndicate larger apartment complexes, just like you guys are and a ton of other people in the country. But along the way, there's going to be some low-hanging fruit. For example, an 8 unit, a 12 unit, a 15 unit that will cash flow for us that we may not ignore because it's in our backyard. It's a good asset. But now we need to decide as a team, is that a joint venture or is that a syndication?
Yeah.
Go ahead.
I'd say for most part, stick with it as a joint venture for the small ones because they can make sense. And there are a lot of people that practice that model and it makes sense. You have to analyze it more past the finances, right? So which one will make the most money for me? Yes. But also what's my goal and direction and which one's going to help that out the most is kind of where I guess I was going with it. But I do know there's a lot of people doing the joint ventures, even at very big size properties, and they're doing very well.
Yeah, that's awesome, man. Okay, let's transition. You're kind of in the same situation as a lot of guys on our team is that we're W-2 employees. We work a full-time job, which is flexible, a flexible full-time job, which allows us to do the real estate investing. So tell us about your W-2 job and how you balance that and how maybe it works in line with what you're doing on the real estate side.
Yeah, so it's been a very learning process to balance it. So I do work in IT. If anyone else knows about IT, it can be remote. I wasn't remote up until COVID. Maybe I'd have 1 day a week remote, but now it's full-time remote, which really allows a lot more flexibility in my schedule. It also allows a lot more, I guess, usage of my time. It seems like we're working a lot more in our W-2 jobs because there are no boundaries, whatever. Someone can just ping you at 6 p.m. at night and, hey, I need help, and if you're on, you're on, right? So, yeah. But to balance it, it's been a learning process. I have 2 calendars. I have my Gmail calendar, my Google Suite calendar, and then my Outlook calendar for my W-2. And so how do I balance the meeting times? How do I balance calls with investors? Meetings in my company, meetings with my real estate company. That's been tough. The biggest suggestion and the biggest success I've had is time blocking. It comes a lot from the book Free to Focus from Michael Hyatt. It's a great book if you're really struggling to work on the right things. It's kind of like the one thing a little where you're working on the right things and how do I get time to work on the right things? Time blocking has been huge for me. So I'll time block out, say 11 to 1 with my W-2 company. And this is the time I'll take investor calls, or maybe I'll block out another hour from 3 to 4 for meetings in my real estate. And that's on my W-2 calendar though. So I put that as, personal work or whatever in my W-2 calendar. And people see that and they usually don't step over it. Sometimes it happens, but It's still a juggle, but I'd say the time blocking is a big useful tactic I use.
So you're integrating all those calendars into one master calendar?
Well, no, I don't, because we have a lot of multi-factor authentication. So how I use it, I have an assistant, and then I send her screenshots of my calendar on Sunday, and she blocks out my Google Calendar in that way. So.
Is that a virtual assistant or like I guess call it in-person assistant?
Well, it's our executive assistant, Olivia.
Okay.
She listens to this. She's awesome. She's kind of an all-around, does everything for the company.
So inside Valkere is there anyone that's full-time? Because is it you and your brother or you and your brothers?
It's me and my brother,
everybody?
Ashton. And then, our wives are in it. So the role structure, we follow the Traction EOS business model. If you've heard of Traction, the book. So Ashton, my brother, is more the visionary type, big ideas, big focus, I'm more the integrator. They call it in Traction. I'm more detail-oriented, operational, keep everything running, make things move, how they move. And then my wife is finance and accounting, some investor onboarding. And then my brother's wife is all investor onboarding. And then we have one assistant who helps with investor onboarding and social media. And then we have one assistant who's the executive assistant. She does kind of pretty much everything, but mainly helps with marketing and sales. So she helps Ashton.
Have you grown into establishing these roles and bringing on these assistants, or did you do that from the very beginning? Because I know for people starting up, there's not a lot of in-house capital to just go hire an assistant or pay for this program and pay for this. Was it just kind of as we grow, I need to free up my calendar or we need someone to fill this role? Is that how it worked, or did you do it from the very beginning?
No, definitely not from when we were working on the duplexes in the beginning and we were working with private lenders. I was doing a lot of it myself with, Ashton. It was just me and him back then. And then we did bring in our wives and they fulfilled some key roles. But what we did find is that, people who aren't good at detail work are going to take substantially longer to do things. And so they're missing out on doing other key items in the business. And that was big for my brother as well. And we knew we needed someone to come in and fill the gaps. And that was probably, I'd say, a year and a half in. You could probably do it early on. There's a lot of cheap virtual assistants and you can learn. You don't learn anything about this until you do it. And so you just got to kind of like eat that cost. We've eaten a lot of costs. I say our expenses are really high. We're working at tweaking those down. We got up to I think almost 8 people in the company at one point. So 4 other virtual assistants. And then we dialed it back down, mainly because of culture reasons. So we wanted to make sure people working for us understood our vision and our goals. And sometimes when you get too big, you don't have enough time, even if they're part-time, to communicate that vision, that culture. So we had to dial back down, push more roles into one person, not as much spread across the board. So I think it's a growing process. You're going to figure it out when you need it. You don't always have to be profitable. Sometimes you got to go in the red to grow. So it is a per company choice, though. It's hard. It's hard for me because I'm always like, no, we can do that. We can do that. But my brother, he's more visionary. He'd be like, let's outsource everything. Let's go on vacation. So
yeah, that's the challenge with outsourcing. Even like a couple of years ago, I had a virtual assistant because I went to the boot camp and they talked about virtual assistants and how helpful they are. And I was like, man, I need one of those.
Yeah.
So I ended up finding a good one, but she was from the Philippines and I hired her. But what I found was I was spending more time on like Mondays trying to give her tasks and then communicating with her and training her. And I was on the same mindset of like, man, I could just do this myself. Like, why am I paying her? But your brother kind of makes a good point. It's like, if you can see long-term benefits of training that person and putting in the time, just think a year from now, you won't have to do that anymore. And she'll just be a smooth operating machine. For me, COVID hit and I didn't have any more work. So I just kind of put her on the hiatus. But your brother makes a good point on that, is the long-term vision of putting in the work. And like you said, going in the red early to know that you're going to be in the black a year from now when that person is trained up. The IT stuff, obviously that your IT background has to translate into some of the programs you use on the real estate side to make things more efficient. Name a few programs that you use for guys that they could easily implement into their business, their real estate business, or even maybe their other businesses. What are like the top 3 programs that you guys are using that have just saved a ton of time?
Yeah. So it obviously depends what kind of real estate business you're running. we don't do flipping or we don't do wholesaling. So I've heard there's a lot of different, call forwarding, different things they use. What we mainly focus around is big projects, right? So we needed a project management tool. I'd say Asana and Monday.com are two easy ones for people to look at. I've heard Asana is free and there's a lot of good things you can do with the free module. Monday.com that's the one we use. And, it's an investment, but when you have everyone working off the same sheet of music, looking how a project is dated, who those tasks are assigned to, it's been pretty fundamental in our growth. So some kind of project management tool is very important. If you're in syndication, you obviously need a CRM. So you're storing your contacts somewhere. You're having automations with those contacts. It's pretty big because eventually, otherwise you just miss out on who you're talking to. So we have Active Campaign, and we're about, I want to say 6 months into Active Campaign, maybe a little longer, but I can't believe we didn't get something like that before. We were using MailChimp. So these two types of tools, what they do is they get a contact database and then they'll send out communications to them. Active Campaign does a little more, but MailChimp is very basic. I mean, it's $12 a month. You can start there. But what you really want to do when you're doing raising capital, when you're talking to investors, you want as many touches as you can before you get to an ask. And so a lot of times people, when they're raising capital, they get on the phone and they go, "Hey, how much are you investing?" And the person goes, "I don't even know you, I just met you. How am I supposed to know if you know, like, and trust you?" And a big part of that is having a tool that's going to send out, a newsletter, but also maybe it sends out the deals. Maybe it sends out helpful information. Maybe it tells people to join a specific type of club that is going to have specific 506B information. So you get all these touches in and then you filter them into this specific private list. So that can help having all that automation or those emails going out automatically without you having to write that all the time and reach out to people. So Active Campaign is a huge one. I mean, I love it. I've been working with it. That's kind of my baby, but it has automations that can do crazy stuff. So if people, click certain buttons on your newsletter that you sent out or links, it can tell you that and you can track what got the most interest. And so very useful. The big one, if you're starting out a business, get Google Suite. I think it's $80 for a user a year. So don't skimp out on a free user account with Google and say at Gmail. Get your own domain, get a Google account. It's very cheap. And you can have, 15 gigabytes of storage with Google Drive where you can store all your stuff for real estate projects and the Google Notes.
The big thing, on the Google, the G Suite, what people don't understand is it's a branding thing too, is when it's Chris at ValkereInvestmentGroup.com versus Valkere@gmail.com, right? Yeah. It creates immediate credibility that you're a professional and that you're inside Google Suite. And also we use Google Drive as well. Nice. It's just an unbelievable tool to just store all the documents that everyone inside your group can go in and see and access. So that's a good point. On Active Campaign, so go back to this CRM because this is so important for people to understand that even if you're starting out today, get on. You can either do a paid account with Active Campaign. I'm not sure. Is there a free version there or no?
It's pretty cheap. I don't know if it's completely free, but what they do is eventually as you get to more, I think under 1,000 contacts, pretty free. Once you hit 1,000, it goes a little higher.
Yeah. We use HubSpot and it's kind of the same deal where you can put a contact in and you just make notes who he is. And you start categorizing contacts within your CRM. But a question I have for you, Chris, is, we have this challenge inside our group is that if we don't have a deal, right, we're trying to syndicate an 80 plus unit apartment. We know this could take 2 years for us to finally land a deal. Like what kind of content are you sending these investors? So you go out and let's say you get 50 people that are interested in what you're doing and you put them in your CRM and they're under your investor category and you want to start sending them content. How often are you sending content? And what are you sending when you don't really have anything to talk about? Like maybe you don't have a deal. What are you sending them to keep them interested?
That's a great question. So a big part of this whole business is copywriting. And what are you communicating out in your emails? What are you talking about? What we do is we do have a monthly newsletter, but then we started a mini newsletter. So it's a bi-weekly now. So we're only doing 2 automatic emails a month. But in between that, I actually write different, more personal emails that go out to the chain randomly. So they'll be sporadically. So I do that. But what do we put in those? Often we'll center it around some big topic. maybe a personal topic, even for us, our family, our company. We always start our newsletters with kind of a personal, how we're doing or what happened or something big in the market or, relating a funny story to why we like this investing model or something, make it impersonal. You don't want to just blast them with the market went up 2%, blah, blah. Nobody cares to hear that in an email all the time. They want to see some personal. Make the subject line catchy. Like how I dropped an egg and it saved me thousands of dollars. Like people are like, what? But what we do in our newsletters a lot is we'll have that personal touch. I write a blog once a week. So there's content for whoever's doing the newsletter, and that happens to be my brother's wife. But it used to be, an assistant, and she would take that content over. So providing that content is pretty key. So they have that blog. We'll put news articles, yes, important things. The Fannie Mae changes in March, for example. So you should be looking for content and be able to put that in there. You do your personal content and then you kind of put something informational. Maybe you do YouTubes, maybe you do podcasts. You could put that as a piece. So, hey, did you catch our latest podcast? And then, finish it out with just, hey, what am I asking for? So that's what we always do. Make sure you add in, hey, I'll join our investor club to get personal private lists. This is our public list. This is our newsletter list, whatever. Join our club, whatever you want them to do, whatever you want, your funnel needs to go down, down, down. And at the bottom is what your ask is. So you can always put that in at the bottom. And that's the way you are ensuring there's constant flow through that list. So you should have an ultimate goal when you're doing these communications and know what that is to filter them down into it. But you can put a lot of different things in there and test it. With the great thing with Active Campaign or probably HubSpot, you can see who opened it, who clicked it. Just keep testing it. Keep putting different subjects, and
right. And don't get your feelings hurt that if you don't get a lot of opens on those emails, because you said, you're sending these out bi-weekly. Well, that person's probably getting 30 emails a day, and they're deleting and sifting through, and they may click open your email, but they may not click through and read anything, but they're getting it and they're seeing Valkere Investment Group, and you're looking like the expert in the field. So if you're sending out this blog and these videos and these articles about the environment that's happening in the United States with multifamily, you're gaining credibility with those people that, hey, Chris is the expert in this. And then when you have a deal and you send it, they believe in you. They believe that you know what you're doing because of all this information. I think the mistake that some people make is they don't touch those investors for months at a time, and then they just send them a deal. Hey, I got a deal. You want to invest? And nobody really wants to put their money in it unless it's their family friend who know you. So
exactly. Why do you have that CRM in the first place? It's to be able to get out and reach out to multiple people as much as possible, and obviously you don't want to spam people, but the real purpose behind it is so you don't have to go write an email every week or contact these people personally, because you couldn't even do it if you tried. Does that mean there's going to be, a good 20, 30% that unsubscribe because they don't like all that automatic emails? Yeah, sure. But maybe they weren't part of your network anyway. So why does that matter? You should be hoping that people unsubscribe. You want to filter it down to people who enjoy the message you're putting out. And what we've just started doing even is having a survey. And this is really cool, but ask people what they like to hear about. Maybe that's a letter right there. What would you guys like to hear about? Which letter of these 3 that we sent in the last week you found the best? Or, you can ask things like that. You could change the email that sends it or the email address. See if that does something, maybe they've blocked you. And so you try a different email address, but no, it happens. It happens sometimes. If you have a company email address and then you write one from Chris, at Valkere Group, maybe that gets a different response. So all things to try.
Yeah. When we're writing our newsletter or our email to investors, we're always, like you said, you want that call to action at the end, whether it's hey, watch this YouTube video that we did on a property walkthrough, or, hey, would you like to join our mastermind investor group, or a little survey at the end that just creates an interaction with that person before they just want to delete that email or file it or whatever they do. You mentioned, you guys have done a lot of deals with partners. And when you say partners, I'm assuming you're saying other GP groups around the country, correct?
Correct. Yeah.
How many deals have you guys done with other GP groups?
So we've done 3 now. So, we started in 2018, 3 GP groups, I should say. 3 deals with other GPs. There's been multiple GPs in them.
How long did it take you guys to land your first? You did the 16 unit deal, right? You said you started in 2018. Right. When did you land that 16 unit deal?
I think that was Probably ended 2019.
Okay. And then and the next deal after that, I'm just trying to get a timeline here.
That was September 2020.
Awesome. Okay. So about a couple years to do, and that was with the partner GP group?
Correct. Yeah.
Where'd you find them?
So here's the fun thing is us performing that 16 unit validated our credibility to other groups. And so I remember we were working on the 16 unit. We had a flipper friend of ours who works closer with us, a guy named Joseph Druther out of North Carolina. And we worked with him. We were just talking with him. He says, hey, I have this syndication group that you guys, it looks like you're growing in the space. How about you reach out to them and have a call, talk about the 16 unit? And I was like, sure. So we actually shared that 16 unit as we were in a contract with this other group. And they basically said, okay, this is what we do. This is what we wouldn't do. That's cool. Let us know how it goes, basically. So when we did close that 16 unit, and when we had it all wrapped up and everything was going great, we ended up, some reason we connected again at a network meetup and they asked about the 16 unit. We were having some whiskeys. And after that, they saw that we were, active people in the space and brought us into the 84 unit. So yeah.
Whiskey, Wealth and Whiskey. Is that what?
Yeah. Wealth and Whiskey. Yeah.
So what is Wealth and Whiskey?
Yeah. So that's another way we reach out and contact and network with people. We do a Wealth and Whiskey mastermind. That's the end of the month. It's every Thursday at 5 p.m. PST, end of the month. And it's just really, we don't have a super agenda. We usually have a guest and people come in and listen to a subject that's the topic of the month. And I think this month we have Ariane Lemire. She's doing she's a big time real estate out. I think she is in North Carolina as well, but really cool topic. I mean, I think they have 1,600 units or something. I might be off, but yeah, you listen to a guest and then you just drink whiskey and network with other people. And a lot of partners meet at that, and we hear about it later, which is cool.
Is this virtual or is this in person?
It's virtual. Yeah, we do virtual.
Is it an exclusive group of masterminds or is it like open? Hey, if you want to come join, or is it by invite only?
It's open. We put it everywhere, but the Facebook group is kind of locked down. We, if people want to join that, we let them know they can come in and talk and connect there as well. But that one, you kind of need a little entry. But yeah, it's free. I mean, we've thought about running a paid mastermind, and that might come later. But for now, we like just networking and teaching in that kind of session. So.
Yeah, I asked because one of my partners in Shreveport here actually just had a luncheon yesterday, and we got 13 high-level investors, entrepreneurs in the city together for lunch. And we want to create this exclusive mastermind group, not necessarily hey, you just come, everyone, all of a sudden it's 100 people and 50 of them have no real desire to do it. They're just there because it's something to do. So we're trying to create this exclusive group, and we're going to meet once a month. But I don't know, maybe you can provide some advice on this. How do I keep them engaged between the luncheon yesterday and the next time that we're going to meet? Because what I don't want to happen is we go to lunch a month later and everyone's just getting to know each other again. And we're talking about the same thing. I'd like to keep them engaged between now and then. Do you have any recommendations on that?
I think, get a meetup. If it's meetup.com that you can use to do that, or, even you use Eventbrite, have something that puts them in a group. Maybe it's a Facebook group, maybe it's meetup.com. That's its own group in itself. But if you have people join there, have some way to interact with them throughout the month. And if they can interact with each other, the more the better. If you're creating a mastermind, that's what you should focus on. They need to interact with each other, not just you. So you can have them on a newsletter list or some kind of list that's for that group, but you really want them to interact with each other, interact with you. So now the key to this whole thing, if you want to form that mastermind, because we're putting this together too, this first one was a proof of concept. Again, you try it out. You need to interact with them as well. So you're going to have to start doing weekly interactions in this space, in this group that you create virtually, where you go, I don't know, you've probably seen them. You join the group and you say, hey, who's working on a deal? That kind of thing. And people see that and they interact and they communicate. But yeah, if you don't have some kind of space where everybody can interact with each other and you can interact with them, they're going to forget it and fall off. We actually had a group that was free and we were giving away pretty much how we did 120 unit in Summerwind. And I think we had one person show up, two people show up, and it was interesting. It was only two investors on the deal. And so when you make things free and when you make things not as interactive or weekly interactions, people will fall off.
Yeah. So my idea was to create, are you familiar with Slack?
I am. Yeah.
Yeah. So my idea was to create a Slack group with these 13 to 14 people and create channels within that Slack group. There's one that we're involved in. It's called the GOB network. And it's like 1,000 people across the country inside the Slack channel. And there's different channels inside Slack, like Deal Flow Florida, Deal Flow California, fundraising, legal. And I'm trying to tie all these people into that Slack group and start engaging in there. So it's almost like we're texting each other without being bogged down inside a group text message. But my worry is that I'm going to be the only one. Like, I've got to break through to them for them to engage inside that group.
Right.
And maybe that's out of my control. I can just throw it out there and start putting content inside there and hope for engagement. But that's my goal with this mastermind group, is to make it more exclusive versus then an open group, because there is an open group in Shreveport here, but it's got a lot of like newbie beginners, tire kickers that say they want to do it that don't really want to do it. But the wealth,
there's a lot of models. Yeah.
Wealth and whiskey, do you have to drink whiskey on the call? You're not allowed on?
Oh, no, you do not. I mean, we have, there's a lot of women that join that don't like whiskey. So they're drinking wine. No
Okay.
Big deal. Yeah.
Everyone's drinking though?
Yeah.
That's awesome, man.
Hopefully. No. Sometimes I won't even, maybe I'll just, I'm not going to have a drink that night because I had a rough weekend or something.
Yeah.
You don't have to, but it's just kind of that ring to it. And we actually will be doing a whiskey tasting event. So that's coming up too. One of the people that works with us, she works at a whiskey bar in New York. So we'll do some kind of whiskey tasting event where we'll actually maybe ship whiskey to people and
that's
go
awesome.
through a tasting. Yeah. It'll be pretty cool.
Just don't ship the wine to the women, I guess, or whatever.
Yeah. Right. Well, they got those little bottles that we could find, but
yeah. So what, just trying to get to, to wrap this up. I know we got schedules to adhere to. What markets are you guys targeting specifically and why?
Sure. Yeah. So we started in North Carolina, still have property there. Durham, Raleigh area is awesome. Then we shifted to Columbus. We unfortunately only had the 84 unit closed there. There was a 220 we were working on, and that fell through due to some COVID issues, but more partner issues. And then we had a Texas deal. So we liked Ohio. Columbus, I think, is great. There's a lot of population growth there. There's a lot of value add there that can be done. Texas, of course, is booming. A lot of people moving there. A lot of businesses moving there. It's got more freedoms that people are enjoying as far as they unmasked first and a lot of stuff like that. But we're right by Dallas Fort Worth. Like that area mostly, but anywhere, San Antonio and Austin, you hear, and they're all blowing up. Florida, we just went to Florida. So Orlando, Tampa, big markets in multifamily, Jacksonville as well. We're in Daytona right now on this new deal. Just a lot of population migration there. Good employment numbers compared to national average. So we look at the market indicators and we try to get these tertiary markets. You'll notice they're more tertiary markets that we're going. I'm in Phoenix, Arizona. I actually don't invest here. It's very expensive. There's a lot of deals to be found here though. So, and I know a lot of syndication groups that are doing very well here, but we're kind of focusing on those market indicators and also partnerships. And I go back into the partners. We like to work with really experienced asset management teams. We are not an asset management team. We don't necessarily take over the unit and do the renovation schedule and work on the turns. And so a lot of the times we will take deals where good partnerships exist. And for example, this one in Daytona was with Lloyd Jones. And, they actually got this property 2 years ago. And so they're 50% of the units are completed and we're coming in and finishing out the 5 years rest with them. So we have a proven business model. And I think that's, what we like to look for. We like to look for a strong team as well as a strong market, because a lot of times new syndicators rush into a strong market and have no idea what they're doing. And the rate of return gets all wacky. And I've heard crazy stories lately of people not paying out distributions for over a year and a half because of COVID on different syndication groups. And it's because they're, not sure what's going to happen, but I don't know, sometimes you got to work with the right team. And if you don't have that experience on a side, like we don't have the asset management experience, we flipped duplexes and we flipped, 16 units and we did all that. But when you're doing a 384 unit, you really need a team on site that knows what they're doing. And that's why sometimes we'll end up in certain markets. So
yeah. Market indicators. You said that during all that. What market indicators are you using to target these markets?
Sure. Yeah. Big one. I mean, go on and check all the big sites out. IRR.com always puts out different reports and publications. CBRE, Marcus and Millichap. There a lot of free information's out there. We don't pay for CoStar on our side. but we have partners who run big reports on these properties, and we get to be a part of that. But, the easy ones are population growth. Where are people moving to? Unemployment compared to national average. Is it lower? Is it higher? You want you want lower unemployment. Multiple employers in the area, right? So if you look at North Carolina, a lot of big tech in Raleigh, a lot of people moving there. It's supposedly the new Silicon Valley, a lot of growth in the employment sector. Phoenix as well, Dallas as well, Texas as well. And then let's see, what else did I not cover?
Crime rate. Did you mention crime rate?
Yeah, crime rate's a big one. If you look at Columbus, though, the crime rate can be a little factor there. So
I think with the crime rate, you have to kind of dig into the submarkets within that city. So if you say like, hey, yeah, I love Tampa. Well, there's some parts of Tampa that you're not going to love.
Right.
That could be real, right? The population growth, but people are moving to certain submarkets within there. So do you use any software to go dive in to look at the submarket within a city?
We're not as much doing that. No. We're looking at, the free ones that people can use, though, if you want to look at that. We used to use like bestplaces.net. What's the other one? I mostly look at those big reports that come out from like CBRE and Marcus and Millichap, and they're listing off these different markets that are good. And then I go in and kind of do some research into those different areas and see what we like. But not as far as where I'll drill down into the neighborhoods. I'm not going to that depth, but we do, if I do know we're getting into a market, I'm going to visit it. I'm also doing the Google Maps thing, cruise around that area and see if you do like the neighborhood, because when we started this, we did jump into some markets in North Carolina that looked amazing, but then you get there and you're like, man, these are not as nice as I thought they would be. And that's the importance of having that asset management team on the ground that can talk to how the neighborhood really is.
That's it. I was just going to say, like, if you're partnering with the right asset management group in that city, they're going to know that place like the back of their hand. Just like wherever you live, if someone called you that's never been there, you'll be able to tell them, go here, don't go here.
Yep.
Right. So if you're partnering with the right people inside of Tampa or Jacksonville or wherever in Texas, they're going to know that that's those submarkets. And Google Maps, like you said, I've done a lot of tours on Google Maps. It's a wonderful tool to just punch in the address, change your map to grid view or whatever it is, and you just get on the street level and you walk the streets.
Yeah.
And you can immediately see with your eyes, like, hey, this is a Class C neighborhood or a Class B neighborhood, or this is the ritzy part of town. Yeah. But anyways, we're going to wrap this up. Let me ask you this. What's your advice to, dial yourself back to 2018 when you were starting? What would you do different knowing what you know now? Like, what would you tell somebody that's sitting in your shoes? Because there's a lot of people out there that want to syndicate apartments. What would you tell them to do? It's really get clear on your goals, I guess. Not everyone needs to syndicate. Not everyone should. It's developing a business. A lot of it takes a lot of work. If you set it as a goal, make sure, you stick with it. Make sure you know what you're getting into. Do that education beforehand. But ultimately, you'll never really know anything about anything until you kind of put your foot in. So you can do all that preparation. You can set all the goals. You're going to run into problems. You're going to lose money. You're going to make money. So just know that going in. I think when we started, I was hesitant to start. I'm more of the details guy, make everything in the way it needs to be. But what I've learned over the time is you will make mistakes. There are problems that will come up. There are partnerships that won't work. There is capital that won't be raised, but there are deals that will work and there's partnerships that will work. And you just don't know anything about it until you step in. So it's about picking a path. So setting your goals, picking a path and just going into it. And you adjust along the way and you find out what you like and find out what you don't like, but you'll never know until you start. So I know a lot of people who spend a lot of money on mentorships and never do anything. So make sure that you pick the path that's going to motivate you the most. If that is having a mentor, make sure that you know that you still need to do work. If it's actively doing it, make sure you are doing that role that allows you to execute on whatever the project is. Don't walk into something and think it's just going to be handed to you. You do have to work in this business. Yeah. And you have a lot of responsibility. I can't say that enough. You are representing a lot of other people who've worked hard for their money. So make sure you take that very seriously. And, don't just hazardly say you want to be a syndicator, because that happens a lot. If you're messing with the two most important people in people's lives, their kids and their money, you need to be very, very responsible and understand how important that is.
Yeah.
And, one thing we didn't dive into, obviously, is, and this is my opinion, this isn't you can't do this alone. You need to build a team around you that complement your skills. Find someone, if you're not good at something, find someone that's good at it, that's like-minded, shares the same vision as you, that you can work with every day, and then go out and find other groups similar to you. And that's how you're going to close deals.
Very much. I totally agree with that. Yeah. Partnerships is usually where I say is the most important thing in this whole business. And probably the biggest lesson I've learned, because a lot of times you want to do it all yourself. You can't do it in this business. So,
all right, man, where can people find you?
Yeah. So the easiest way, go to our website, valkeregroup.com, VALKERE group.com. We have a lot of information on there. We have a lot of ways to get in touch with us, free ebooks on there. That's the easiest way. Otherwise, I'm on LinkedIn. I'm on Bigger Pockets. Search Chris Levarek, and happy to talk, happy to have a call. Good way to get a hold of me. So,
Chris, appreciate your time, man.
Hey, thanks, Brandon.
Thanks for listening to the Guerrilla Estate Investing Podcast, where we give you the ground-pounding truth about what it takes to be successful in real estate. Learn more at realfocus.org/Guerrilla Estate Pod.